What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 9th of 2018. Well, folks, instead of doing a daily update here on the DataDash channel, I thought I might as well go ahead and do a video that many of you out there in the DataDash community have requested, and that is a short, sweet, and to-the-point video sharing my stance on the current state of crypto markets and the longevity of Bitcoin and other cryptocurrencies. So without further ado, I'm going to go ahead and jump into it. I know I've been relatively absent over the past few weeks due to my trip, so I'm sorry about that, guys. However, I want to go ahead and jump into it and not push it off any longer. So there's really two main focus points that I'm going to be really drilling in through this video. First and foremost is to ignore both the FUD and the FOMO in the markets, the fear and the hype that gets spread within the headlines and the news and the media, and focus on the fundamentals. This is something that I really care about if we're talking about the longevity of crypto markets. The second thing I'd like to focus on as well is to understand market cycles. Again, we're going to be really talking about both of these in sync as we go through the video, and it's very important to understand that not only do traditional markets cycle, but Bitcoin and other cryptocurrencies cycle as well. Okay, so now that we've drilled those in, let's go ahead and talk a little bit about what's been happening. So we obviously know it doesn't take a genius to understand that for the past few weeks, we've been going through a correction, both in Bitcoin and in altcoins since the peak in December. So a lot of people were on the idea that, is this the end of crypto markets? And this was really stirred from the topics that, for example, Tether was getting issued a subpoena. We had India in talks that it might ban Bitcoin and other cryptocurrencies, according to the headlines from major media outlets. And of course, from the beginning of this entire pullback, we had the fear that South Korean markets were going to ban cryptocurrencies and ICOs. So with all these headlines flourishing in, and many that I didn't even mention, many people were obviously fearful on the market. Fear started to settle in, and much like every other boom and bust of Bitcoin in the past, we've seen a massive write-up to the upside to make all-time highs, and then a correction followed in with a lot of fear in the market, a lot of really undecisive headlines, things that cause uncertainty and doubt in regards to cryptocurrencies in the long term. Well, now that we've obviously understood that, we also understand as well that over the past few days, we've seen crypto markets make quite a nice rebound. We've seen, I think it's been about 2 to 3 days really where altcoins and Bitcoin have been really making double-digit days, or at least going to the upside. So this is really good news in a sense. I thought we were pretty much done for in regards to cryptocurrencies from all of the talk that was coming from the community. There was a lot of people out there, in fact, a lot of people who were Bitcoin maximalists or altcoin permabulls who just absolutely to the upside didn't doubt cryptocurrencies and their potential. But when markets started to go down, they started to doubt things. They started to believe that the longevity wasn't there, that we were overdone for, that we were either never going to come back to the highs or we were going to be in a prolonged bear market instead of just having a correction. Well, luckily, we can see that we've already had a 50% retracement back up to the upside. Now, we do have a long way to go, but this really speaks towards something that I want to drill in, and I'm going to start drilling in my two major points that I talked about at the beginning. Now, this chart right here is a list of all the historical corrections in regards to Bitcoin. Now, it's not completely up to date. This wasn't the final day of sell-off down here on February 2nd. In fact, we went all the way down to 6,000. So the correct percentage there, instead of 59%, will be 69.49%. Generally, 70%. Now, 70% sounds like a lot, and to be fair, it is. It's a stellar correction for the period of time that Bitcoin was going downwards. Even within a little over a 50-day period, this is a pretty serious correction. However, Bitcoin itself has seen corrections like this in the past. We are not shy from corrections in regards to Bitcoin's price within short periods of time, prolonged periods of time, and I think it's very important to emphasize why this chart right here, this graphic, is so important. And that is to issue the fact that crypto markets, just like any other traditional market, they go through cycles. If we take a look back over the past year in 2017, we really recap on it. Bitcoin went from a whopping $1,000 all the way up to $20,000 at its peak. It had a 20 times run up, and that is fantastic. But at the same time, guys, markets don't always continue moving up. And with that, with the fear that starts to come in towards the highs, when the institutions are locking in profits, you can bet that with one or two wrong events or things that might lead towards mysterious questions in the longevity of crypto, you're going to see the media start to print the headlines. The FUD starts kicking in. And boy, did it do that all through the months of December and January. People started to panic in markets. Even though on the core, as we kind of relay back to it, the fundamentals stayed the same. Let's think about it for a second. First and foremost, Lightning Network. This is the test net, and we'll focus on mainnet in just a minute. The testnet has over 2,000 nodes as well as almost 6,000 payment channels. This is really exciting stuff, guys. To see something like Lightning Network getting this kind of testing early on and people adopting the technology, to see almost 2,000 nodes on the network doing this is fantastic. And on the mainnet as well. For those of you who don't know, Lightning is already launched on the mainnet. Well, we have over 1,000 nodes on the mainnet running right now on Lightning. So this is extremely exciting stuff. Whether you guys believe in layer 2 solutions or if you guys are, original Bitcoin Core, Bitcoin Cash fans, doesn't really matter. This is really cool stuff to see that people, even in this time of FUD and panic and talks of governments banning cryptocurrencies, we're still seeing massive innovation and people testing and trialing these new innovations in regards to cryptocurrencies. And it's not the only thing that's doing well. Coinbase the other day announced that they're finally, not in March, not in April or in May, they're going to finally, in February, integrate SegWit. This means, in simple terms, for those of you out there who don't really keep up with SegWit and all the other different types of innovations and debates within the crypto community, it's going to mean lower fees, and it's going to be fantastic for cryptocurrencies. It's much needed after the recent rally of Bitcoin up to 20K, where we saw fees around $30 to $40. It's not sustainable. Well, now, not only do we have Lightning Network helping to scale Bitcoin, but we also have SegWit coming through in regards to Coinbase. And this is going to mean a massive reduction in regards to Coinbase fees and generally Bitcoin transactions. So very good news in that regard in the sense of adoption and using Bitcoin as a means of transaction, whether it be for trading or for spending. Along with that as well, the SEC and the CFTC bringing a breath of life. I really love the headline in regards to cryptocurrencies for the long term. For those of you who didn't get to hear the hearing in regards to the SEC and the CFTC, it was really positive. Now, again, I like to put actions before words, but if we are going off of what they said, there was some really nice quotations, and I'll just go ahead and scroll down here and read some of them. Virtual currencies mark a paradigm shift in how we think about payments, traditional financial processes, and engaging in economic activity. Ignoring these developments will not make them go away, nor is it a responsible regulatory response. The evolution of these assets, their volatility, and the interest they attract from a rising global millennial population demand serious examination. Distributed ledger and other emerging technologies have the potential to further influence and improve the capital markets and the financial services industry. So again, if you haven't heard it, guys, you got to go watch it. There was some really positive news that came out from the speech. And though, again, it's all talk right now, we have to take it as that. There has been nothing but fundamentally good news in regards to crypto markets. And I'd say, in my personal opinion, that fundamentals on the positive side have outweighed any negative news that might have come out. Now, a lot of people have been fearing in the market in regards to Tether or a government like South Korea banning cryptocurrencies. But as of now, this is just general talk. We'll have to see what comes out of the subpoena. We'll have to see if South Korea will really ban cryptocurrencies. India, for example, was announced that the headlines were saying that India was going to go about banning cryptocurrencies. However, they didn't issue any sort of ban, and South Korea as of yet has still not come to any serious conclusion. In fact, if you listen to the Prime Minister, he really only stated he wanted to stop two things. He wanted to stop the funding of illegitimate ICOs and potential Ponzi schemes in the crypto space, which are completely fair statements and I think judgments from a government which, as its job to protect people, should follow into the crypto space as well. At least they're going to try as well. So now that we've gone through this, guys, now that we've dispelled a lot of the FUD and we start to think about this in a fundamental sense, it starts to make all of this kind of bearish talk, this doomsday viewpoint of cryptocurrencies really kind of fade away. And it's kind of where I've been standing for a while. And I wish earlier on I could have kind of issued this to you guys. So I do apologize in that sense. But I want to go ahead and take a look here at the price of Bitcoin, because I know many of you want me to think in a technical perspective. You guys want me to do some crazy analysis on the price of Bitcoin and see whether or not there's an indicator that's telling me whether or not we're going to go to the moon or if we're going down to rock bottom. Well, I got to tell y'all, folks, if you want my opinion, and again, it's nothing else other than that, you've got to do your own research, guys. This is, in my opinion, the time to buy. This is where if I had cash, I'd be pouring it into Bitcoin. And why is that? Well, if we understand market cycles, if we understand that we just had a drastic practical 70% correction in markets, and now we see Bitcoin holding quite well, we understand that in market cycles, we buy low and we sell high. We didn't buy at 20,000. We weren't buying at 17 or 18,000. We knew that the market was going through absolute, that's my favorite word, exuberance. And now we have the opportunity for those who didn't get a chance to get into the market. Now, a good way to put this is to think in an institutional investor's mindset. If they, for example, didn't have the instruments or the opportunity to buy Bitcoin at 18 or 20K, and they were not only worried about buying at the highs, but they're thinking, oh God, I'm missing out on this opportunity to get in. And now they see Bitcoin around $6,000 to $8,000. What do you think they're going to do? Well, look at that volume there, guys. They're going to start coming in. They're going to start buying into cryptos on this dip. Why? Because it's cheaper. And now, at this opportunity, they have much more of a chance to get a reward comparative to the risk that they have to make on their trade or investment. So this is really what institutions would most likely be doing if we think about it in a fundamental market cycle sense. So I'm going to think like the institutions. I'm going to think like the big money guys. I'm looking at this opportunity to add. And we can see here we're now back above the 200-day, signaling a sign of confidence. Now, I don't know if we're going to rally back up to new highs. I don't think we'll go up exponentially like we did back in November and December. However, I will say this, guys. I believe that the market correction is generally over. And whether or not we move sideways a little bit, this is a wonderful opportunity to get back into Bitcoin or get your first additional Bitcoin under $10,000. To be fair, I didn't think the opportunity would come, guys, but when we broke the 100-day, it was clear that this probably had some more downside. And it went through, made contact around the 200-day, and found nice support at $6,000. So, again, guys, there's no crazy indicators you need here. There's no crazy perspective you need. But you can use some really nice simple indicators. The RSI was registering oversold. The MACD now is signaling a bull cross up here at the blue line crossing the orange down here. So we can obviously see that the market is probably going to start taking a little bit of upside action. We've been through the fear, we've been through the FUD in the markets, and now it's time to start seeing some upside action. We understand that the fundamentals are good, and if the fundamentals are good and you've got a discount, why doubt the markets? That's at least my perspective on it. I will say if there's any fundamental market that I'm worried about, it's the U.S. stock market. Okay, so that's a topic for another time. If you guys are interested in me talking about that, leave a comment down below. But there's been some dramatic sell-off in traditional markets. And I want to give you all a good reminder, if traditional markets start to sell off, if we start seeing a sell-off in stocks or commodities or in bonds, whatever it may be, that capital needs to go somewhere. A lot of that valuation is going to circulate into other markets. And I have no doubt in my mind that as more financial instruments come out for cryptocurrencies, that institutions are going to take upon these opportunities to find Bitcoin below 10,000 or to find Bitcoin below 20,000. They're not going to miss out on this, guys. They realize there's something bigger here. And hearing that from the SEC at least shows a signal that they're listening, that they're researching, and that they're trying to understand this. So, anyways, guys, that's it for the video. I know it probably was a little bit longer than I intended. However, wanted to get the fundamental information out there and really spread my personal opinion on these markets. But I'd like to know what you guys think down in the comments down below. Again, guys, I know these markets can be crazy, but it's a volatile market. It's a new market. This is the wild west of anything that I've ever seen in regards to finance. And I'm so happy that we're all playing a role in it, because I think the much grander picture here is something we can't even imagine. Think about the markets in 5 to 10 years. If you're trading these markets, that's fine. But I'd recommend to look at the long-term perspective, because you're going to be looking back and laughing at 20,000 in my personal opinion. And you're going to be rocking it up to all new highs in the next few years. All right, guys. So stay safe, trade smart, and I will see you guys in the next video. Stay tuned.